Versa best company.
Versa business system.
It's a better Versa business system.
Versa business system.
Welcome to the Versa Business Tips Podcast. I'm your host, founder and CEO of Versa Business Systems, Shaheen Mazloom. We're here with David Flores Wilson today. He's a financial guru. He helps entrepreneurs build wealth, helps them with their exit, figures out what to do next. Dude, David, thanks so much for hopping on with us today. So your company, Sincerus Advisory, right?
Yeah, it's great to be here, Shaheen. Looking forward to the conversation. Yes, we're a wealth management firm here in New York City that focuses on advising entrepreneurs, business owners, founders.
Right. Man, New York City, there's so much competition, dude. Like, how do you position yourself? Like, I mean, I'm in Maryland. It's not just outside of Baltimore. It's a big city, but New York City is like a whole nother level. The amount of, companies in the same industry for any industry, like, how do you stand out?
Yeah, I mean, I think that when we're lucky enough that people retain us and work with us, it's an amazing privilege, right? To be able to give them advice and steward their wealth. And so for us, that responsibility is we take it so seriously, right? So it's about getting better every week, right? In terms of just understanding that last this other tax strategy or this investment. Nonstop, relentless obsession to sort of getting better for the client base. Right. And so, it just grows one client at a time. And when people are happy with the work that we've done, they introduce us to people that they care about, and we help them as well. So,
yeah, absolutely, man. So for those out there that don't know you and what your company does, give us a little rundown of the things that you guys focus on.
Sure. So, we work with a lot of business owners and entrepreneurs, right? And so when it comes to their businesses, we want to be helpful, from the formation of their business to the growth and to the exit and beyond. And so, there's this concept of exit planning. And I think that for many people, they're like, oh, that's years away. But for us, we want to implement these concepts all throughout our planning engagement. And so, what that really means is, getting them ready, making a more valuable business. Like when exit planning is done well, you create a business that's more attractive. You're financially ready. You're sort of personally ready. And so, we kind of just go through our checklists and our systems and say, hey, are you optimizing on the tax side? Are you optimizing with your investments? Are you mitigating all the risks that you potentially have there, both on the personal side and the business side? What's your team look like? Are there opportunities to bring in other people to elevate your team? Because your business might be going to the next level, and you might need other team members to help you at that point, right? So it's we learn something new every day. I think for example, we spent the last month or so just really pouring through the tax bill and looking at all these sort of different planning opportunities, ways that business owners can save money, make money. Reduce their tax bill or structure their businesses, all these sort of different opportunities. And so that's just it's kind of a different thing every day, but that's sort of the thing we're focused on.
Yeah, definitely, man. Dude, like things are forever changing, right? When it comes to wealth management, like there's the dinosaurs that just do the same thing that they've always done. And then, there's the newer, younger guys that are constantly learning about the new things that are coming out. You bring up a great point, this big, beautiful tax bill. We've been focusing a lot on it, right? Like we help businesses save money, implement different tax strategies and incentive programs and things like that to save them money on their taxes, to get them more tax credits and things like that. What are some of the biggest opportunities that you're seeing for businesses in this new tax bill that's just come out recently?
Sure, it's different for depending on the type of business that you're running, right? And I think
Right.
one of the most profound, it's almost the Michael Jordan of financial planning techniques when it comes to business owners is the qualified small business stock, QSBS. You get a $10 million capital gains exclusion when you sell your business if you kind of hit these different requirements, right? You hold it for 5 years, you got to
Right.
be C corp, you got to be a non-service business, so it's a technology or a product or software, things like that. And so, but there's all
Right.
sorts of different ways. In the tax bill, that exclusion amount went from 10 million to 15, right? So you can imagine, two partners, they sell their business for $30 million. They each have a $15 million exclusion. They don't pay a dollar of
Yeah.
tax on the federal level if they hit those
Right.
requirements. And then there's also sort of different strategies using trusts and other things that you can multiply that exclusion because as you sort of give some shares away to family members or trusts or parents,
Right.
you can get a higher exclusion amount. And so those expanded, sort of new opportunities, you now can have a partial exclusion if you hold for 3 years or 4 years instead of the 5. There's an
Right.
asset test that a lot of businesses like didn't qualify because they're over sort of 50 million of assets, and now
Right.
businesses that are over 75 million qualify. And then what's interesting
Right.
is that's going to be inflation adjusted. So there's a lot of businesses that you're like, oh, I'm a pass through entity. Does it make sense for me to convert to a C corp and maybe potential
Right.
double taxation through because you have to pay tax on your earnings in a C corp, and then if you dividend it out, that's sort of a second tax. But if this benefit is so advantageous for you, you might want to consider it, right? So,
Right. Yeah, definitely, man, definitely. I've been talking to a lot of different business owners about this new tax bill, and they're like, "Where do I start? It's huge. I don't understand it." And honestly, my suggestion has always been
yeah,
ChatGPT. I'm like, if you've been talking to ChatGPT a lot and giving it a lot of information about you and your business and how you guys operate, like put it into ChatGPT and ask them how you can, you know what I mean? Just something, simple and quick that you can do. But there's obviously you guys sounds like you guys have studied it pretty well. What is your process of going through with a business and seeing exactly how they can benefit from this new tax bill, or really any of the different strategies that you guys offer? What does that process look like?
yeah. I mean, we spend a lot of time up front doing discovery, right? In terms of really understanding that
Right.
business. Let's get your personal finances. Let's get the business finances. Let's understand your strategy as a business. What are your KPIs that are important to you? Are there any sort of risk in the business? Are you sort of set up? Whether that's the coverages for the business or maybe even structural things, right? Are you putting the real estate in the right entities, and you might be
Yeah.
separating the operating business from the real estate. And so we just really want to say, okay, let's just really deep dive on that discovery process. And then so if we've done that work up front and we're regularly meeting with clients and getting to know, okay, what's changed in the business, like what do you focus on now? Because I think like what business owners focus on, it changes, right? Like we focus so much on hiring in 2021 and 22. This year is about
Yeah.
tariffs. Like right now we're talking tax, and next year it'll be something else, right? So we have to be
Right.
able to pivot, roll up our sleeves, but always just ask questions about because sometimes it's really the personal that drives it, right? Their business is
Yeah.
going, and then there might be a health issue, and we have to kind of pivot with the planning. But if we sort of done all that work up front, it can make that a little bit easier. And so
Right.
like I think a key part of this too is really understanding the business, what the rate of return is like within the business, right? So if you hire that extra employee, you buy that new piece of equipment, what's the rate of return you're actually getting for that? And I think that the
Right.
problem in my industry is that a lot of advisors are saying, you know what, you got to take money out of the business, put it in this cash balance plan, put it in a profit sharing plan, defer it. without really understanding the true rate of return in that business. And so, when we see a business, the high teens and the 20% return every year, why should they take money out of that business and put it in a 401k? Like, we have to really do the
Right.
work and understand how profitable that business is. And so, and then to pivot off that, when this sort of new tax bill comes in, yeah, like there's lots of incentives for when you buy new equipment, accelerated depreciation, you're building, you have R&D expenses, those are,
Yeah.
100%.
Oh yeah, they're
Yeah.
huge. We've been getting a lot of businesses, some pretty hefty R&D
Yeah.
tax. It's crazy,
Yeah. But as you know, right,
crazy.
it's, just because you're getting the deduction doesn't mean it was a good expense in the first place. Right. And so,
Right. True. Yeah.
um, so, just being disciplined about around that, and
Yeah.
developing a framework. I think that, there's an interesting, uh, new concept in the tax bill, qualified production property, which, when people can throw up a
Yeah.
factory or some sort of manufacturing facility, as long as you keep that facility for 10 years, you can get
Yeah.
incredible tax benefits up front. When you can imagine someone
Yeah.
being like, oh wow, I'm going to get a tax benefit so attractive that it could potentially even pay for the down payment, right, on the factory itself. And
Yeah.
so, I'm
Yeah.
not in
It's
that business
insane.
personally, but yeah, like if you are,
Right.
um, great for you. So that's how we kind of think about that framework in terms of just like,
Yeah.
but also keeping in mind that, it's strategy that should lead first, not necessarily just, saving taxes for its, in and of itself, right? If you're going to kind of take the business in a different direction, or it's going to be destructive or things like
Exactly.
that. So,
Yeah. I see. I hear this all the time. It's like, well, it's tax deductible, and it's like, you bring up a great point. It's like, well, was it smart to
yeah,
begin with, right? Just because it's tax
yeah,
deductible, just because you could get it doesn't mean it's always a good
yeah.
decision,
No, it's
right?
like, Jerry and Kramer
Um.
just going back and forth about writing it off, and Kramer's just like, oh, they'll just write it off. Like, well, what's a write off? Like, is it
Right.
important? Like,
Right.
let's stay focused here, right? So,
Yep. Exactly, man. Um, so, exit, right? Right now, a lot of people are worried about, the exit because there's just so many businesses, one for sale, coming up for sale. I mean, we started doing a new strategy on Facebook Marketplace for marketing. And there's over 1,000 businesses every day going up for sale on Facebook
yeah,
Marketplace. Now, it's probably not the best place to sell a business, but the fact that there's over 1,000 a day going up for sale on Facebook Marketplace is insane, right? A lot of people are having to, do owner financing for their business, or some people have had their business listed for years, and it may be because it's overpriced, and there's obviously a lot of different things. But would you say that now it's more not really just beneficial, but it's almost necessary now to have a wealth management or advisor um, guide you in what you need to do to be able to, one, actually sell your business, but also for a high multiple. It's got to be attractive to the right people that have the money, right? And not just some guy that's going to need owner financing, or you're going to sell it to one of the managers for a monthly payment for the next 20 years,
sure.
right?
Yeah, I mean, I mean, so let's face it, right? Business owners and entrepreneurs, they're stretched for time. They, they're
Yeah.
focused on, working on the business that they love, and oftentimes they don't have the time, or at least they don't think they have the time to really focus on these things
Yeah.
that are important, but maybe not time sensitive. And so, someone like myself or other exit planners, or maybe even their CPA, or consultants, if they can come in and come through with a process to help them be a little disciplined around the exit planning, because a lot of the concepts
Right.
are pretty easy to grasp, right? In terms of just, okay, you got to look at the business from the perspective of the buyer, right? And the buyer wants to come
Right.
in, and they, when they see that you have three different roles, there's no systems and processes, there's the
Right.
risks on the technology side and the legal side have not been fleshed out entirely, it's going to cause them pause, right? And I think it's
Yeah.
delays that really kill deals sometimes. And so
Yeah.
the extent that that owner can build out their management team, essentially make themselves replaceable, right? And so
Yeah.
because someone else can come in and buy that business and run it
Yep.
day one. And so that's a difficult process sometimes, because it does mean
Oh
sometimes
yeah.
reining back the income, maybe not running all those sort of personal expenses through the business, cleaning up the books, um, getting audited financials. And so there's just a lot of different things that might make sense. But for some people, it
Yeah.
doesn't make sense, right? So I think for some people, they
Exactly.
can look and say, hey, like, what are the improvements I could make, and what are the investments I have to do to make that business more attractive? Yet at the same time, that means potentially I'm not taking as much money out of the business. And so, that's a math
Right.
calculation, right? You're like, okay, well, I'm going to take 100,000 less out of the business, um, but I'm going to get a higher multiple, and I'm going to sell it for $1 million more. And so, like, at some point, you just got to weigh those factors and really do the analysis and decide which way you
Yeah.
want to go. Because I do think that the sooner owners are sort of educated and walk through the process of, like, okay, well, this is what it looks
Yeah.
like if I did an ESOP. This is what it looks like if I sold a private equity versus a
Yeah.
strategic competitor, versus keeping it in the family, and sort of what would it take in all those different options, and what are the pros and cons, and what does that look like financially? What does that look like in terms of my
Right.
goals and my family and the stakeholders? Because a lot of times we see owners, they sell the business, and a year later they regret it. And oftentimes that's potentially they've sold to a PE firm, and there's been all these sort of
Yep.
layoffs, and that impact on the community is not there anymore. And so
Yeah.
it's just important that owners walk through the exit door with their eyes wide
Yeah, and
open.
they really understand it, right? Like it's what you mentioned CPA, earlier, and it's like I think people rely way too heavily on a CPA or accountant. The fact is most CPAs, they're tax filers, right? Like, let's be honest, right? Most CPAs are not very well versed in finances and wealth management and all the different tax savings programs and all these different things out there, right? They can do a balance sheet and balance your books and things like that. I think at least my opinion personally is like, and I don't know if you're experiencing the same thing, but a lot of the times the advice they're getting from their CPA that is more of a tax person or someone that's just doing their books like a bookkeeper, the advice is often not correct. And it's more important now than ever to have these different consultants and advisors to be able to help them with the management and setting up for the exit and trying to figure all that stuff out.
Yeah, I mean, I think you really keyed on something like very important, right? That there's a spectrum of sort of capabilities in any sort of
Yeah.
profession and industry.
Oh
Um,
yeah.
and I think it's a little challenging in sort of the accounting and CPA world, because a lot of people aren't coming out of college and wanting to go in that profession, and there really is sort of
Right.
a dearth of junior talent going into that.
No.
And so oftentimes the junior talent is sort of soaked up by the larger firms, and larger firms often are a little bit more expensive, that many business owners can afford in terms of just or justify.
No.
So it is. My dad's a CPA. He was CPA for, like, I don't know, 50 years or something. Um,
Wow.
and I saw as a young kid, like him, people trusted him, and the advice that he gave, and he really had that sort of perspective of looking at different businesses, and
Right.
and just giving that true wisdom and that advice, as well as the sort of the technical side, right? And so, but I think in this world where many people are doing, they could be doing just hundreds and hundreds and hundreds of returns, and so
Right.
they have the knowledge, and some of them are just not really imparting that to their clients on a
Yeah.
strategic level, because that's not what they're
Yep.
being paid to do. Um, but
Exactly. Yep.
there's other people that are, they are, and people are willing to pay for that advice. So it's
Yep.
just a question of, like, just finding the right match for the business, right? So
100%. 100%. It's funny when I bring up wealth management, it's people start thinking about stocks and crypto and what is your take on like tradition? So, my wealth management strategy, so to speak, has always been, land, real estate. It's less risky than stocks and crypto. Do you think crypto is really going to go to, like Ripple's really going to be used by the World Bank and, all these different things out there? Or are people, is it more just a thing that's not really there and it's just making some people some money?
Yeah, I mean, stepping back, I think that we advise on the whole balance sheet, right? And am I a
Right,
crypto expert and sort of up on the latest coins and where they're headed? Not really. Um,
right,
but what I am expert is sort of just looking at the full balance sheet and sort of evaluating the overall risks. And there's some real reasons crypto has run very rapidly in this sort of
right.
economy and the sort of period we're in, right? Like let's look at the amount of federal debt is increasing at an unprecedented level. And so, how do you
Yeah,
play that? Aside from investments in gold and silver, and as what used to be the safe asset class in terms of bonds used to just be inversely correlated to the stock market. And so, I think I understand
right.
the attractiveness of crypto. I think this administration, is kind of taken all the breaks away. I think politicians in both sides of the aisle have seen just how powerful it can be in terms of fundraising through crypto, and
Right.
so the
Yeah.
regulations are being rolled back, and at an aggressive level, vis-a-vis other um, administrations. So, do I know where crypto's headed? I don't, right? And so, but I
Right.
do, get the sense of,
I don't think
yeah,
anybody does. I was just curious
yeah.
what your opinion was on it.
We do have clients that make their living off trading crypto, or we have a number of
Right.
clients that are partners at venture capital firms, and of course they're investing in crypto-based startups, and as
Yeah.
well as many clients have crypto holdings that we will incorporate into the balance sheet. But in general, like I'm not the expert in that sort of asset class, right? Yeah.
Right. Right, right. And now, so the kind of one of the last things I want to talk about is
Yeah.
diversification, right? Um, time and time again, I see these new entrepreneurs or these young entrepreneurs starting out diversifying, right? They've got a landscaping
Yeah.
company and a construction company and a this and the that and the other, and they're like, I'm diversifying, right? And it's like, okay, well, what are you doing really well? And they're like, oh, nothing. Like I did a little bit here, I do a little bit there, and it's like at what point it doesn't make the financial sense to start diversifying. My opinion, and I don't know if it's right. Like I said, I'm not great at finance, for my own finances. But it's when you have something that's working really well, then you can take the time to diversify some things because you've got that extra, money to do so. But until you're doing one thing great, I personally don't think you should be diversifying. But what is the financial advice on diversification?
Yeah, no, you can look at this question through a lot of different perspectives, right? There's sort of the pure
Right,
balance sheet perspective. There's that
right,
perspective, like, okay, well, my self actualization and what sort of my true interests are. But in general, when it comes to business, um, I'm going to agree with you in general that if, when you have one business, let's focus on making that business the best it can be. And when your
right,
clients or customers come in the door and you're providing that service or product, are you doing whatever you can to make that the best in the world? Because once you do,
right,
then you have market power, right? And then you can charge more, though potentially more profits. Then you can sort of use the different levers you have as a business owner, whether it's technology, hiring, more capital, and then sort of just ramp it up. And I think that
right,
um, but some people just their personality isn't that way, right? They were like, okay, well, I'm going
right,
to own this business, and then I'm going to own this business, and if that is their core competency, if their core competency is like kind of going in, setting up this business, finding the right people, and attaining a certain level of profitability, and then moving on to the next business, I haven't seen it very often, but there are some people out
right,
there, and I think the key is to know
right,
who you are as a human, as an entrepreneur. Like, is that really
right,
your skill? Because like for some people, it's like the skill is working on getting the business to be the best in the world in that one particular vertical. But for some people, the
Right.
best skill is like, hey, I'm just going to get B plus, but then do a different businesses and then add it up so I am diversified. And so it's this combination of, okay, who you are and your
Right.
skills. And
Right.
so,
Right.
to get the best, to go back to real estate, oh my gosh, like, real estate has so many tax benefits, right? When you buy real estate,
Yeah.
you manage it, you
Yeah.
sell it. But you really gotta be a real estate person, right? When like, in terms of
Yes.
like
Yeah.
how are you going to manage, when like, the toilets break or, the tenants leave, like, is that really going to affect you emotionally? Is that going to affect how you interact with your friends and family because they're kind of carrying the weight?
Right.
We've had clients who just build up incredible real estate portfolios and they get to their 60s. And they're like, this is not for me anymore. And it kind of blew up the whole
Right.
strategy. And so you got to
Yeah.
1031 it, maybe do a 1031 to a DST or something because, the whole point was like, okay, we're gonna cash flow this, depreciate all the way down to zero, and then it's going to go to the next
Right.
generation and get their step up in basis. And then you threw the plan for off course, and that they're human, right?
Right.
But
Yeah.
my point is that sometimes like we know that this could happen, and so like when I advise people ahead of time, like, hey, by the way, like we got to really know that we want this.
Right. You may feel differently in 15
Yeah.
years. You know what I mean? Yeah.
So
Yeah. Totally get that. So, a lot of our guests will have something that they want to give to our viewers and listeners. I know you have a lot of blogs out there, a lot of information, great financial advice. What can you do for our listeners and viewers
yeah, the
today?
viewers can go to our website and set up a time, and we'll do a free consultation for your viewers. Just chat about
Awesome.
their personal situation. Hopefully, we can be helpful in that short amount of time. And with that conversation as well, there's lots of articles around financial planning for business owners and entrepreneurs on the blog as well. So
Right. Perfect, man. And what's that website? I'll put it in the description
Sincerus
too.
Advisory is the name of the firm of the company. So it's sincerusadv.com, SINCERUSADV.com.
ADV, awesome. So I will make sure to put that in the description of the podcast. That way, people can just click on it. And where do they go to schedule that consultation with
Yeah,
you?
it's just on the website in terms of chatting.
Awesome, right on the main homepage.
Yeah, exactly.
Beautiful, awesome, man. Well, I'll be doing that here soon. It's funny. I think, I just said it myself. I'm going to do that soon. I think business owners, time and time again, like, you can never do it soon enough. Like we were talking before we even started recording, if I had sat down with a financial planner, with a wealth management person before I started my business, or even like shortly after, we'd be in a completely different place now as a company. And it's like we're starting to get into that now that the company is profitable and making some money. And it's like now we got to kind of backpedal some of the stuff that we've been doing. And so it's not ever too early to start is my opinion. Would you agree?
I agree. I mean, although it is understandable, people are busy, and so that's
Right.
why it's our job, in terms of just to roll out these strategies, talk with clients, and
Yeah.
and to also just be a little bit of a pest, right? To remind people,
Yeah.
once they get your
Yeah.
wills done, don't forget about this strategy we talked about. Let's implement that.
Yeah.
And so that's what the team is for. So.
Absolutely, man. Absolutely. Well, David, thank you so much for joining us today. Can't wait to have you on here in the near future, see what's different out there, which it will be. I hope you're doing well, helping people with this big tax bill. And best of luck, man.
Thanks so much, Shane. Take care.
Absolutely. Talk soon.